How's it going, everybody? I'm the BTC Reaper. My goal on this channel is to teach you how to reap the rewards of trading, whether the price is going up or down. So welcome to our next Mastering the Trade video. This will be gaps and how to draw the fixed range volume profile, as well as how to use it. So a gap is created when price action makes a sudden move from one candle to the next, where you see this candle closed right here, and then our next candle started way up here. That creates a gap, which has an 80% likelihood to fill. That means we are likely going to end up coming back down to this range at some point because we made this big move forward. We did make another gap here. We did end up coming down to fill it right away. You don't have to fill them right away. We did make a gap when we moved down to attempt to fill this other gap. So we came back up, filled that gap, and then continued down. We created another one. We moved back down. We did not fill that one yet. We came back down to where this previously gapped area was. We did try to fill it. We didn't get a complete fill as we made a gap when doing so. So then we started to come back up. We did try to completely fill that zone, but we did leave some of it behind, so we could end up coming back down to fill this range. But we did make a move to fill this other gap back here that we left open when we made this move forward. We did start to come back down, made another gap, ran forward through it, and we have been seeing some bullish momentum. We did push back toward this range where we had some gap momentum as well, and we do have one big one right back here at that 50k range, which we are moving towards. This is from our bear market breakdown where we started the bear market. This is where we went from the bull market to the bear market and everything went down. So as an example of how gaps fill and how they're very likely to fill, we do have a gap below us at that 20k level, so keep that in mind as well. Now, that all being said, we have our fixed range volume profile. So when you see mine, it looks very different than the normal, so we will delete this. So let's say you want to target this specific range of price action and you only want to know about this volume, where this volume can take us. The fixed range volume profile is very helpful to do that. You click over here, go down to fixed range volume profile, hit that star, and it'll save it up here just like I have. Then you want to click from wherever you want to begin. So let's say this run up to current price action. It will look like this. Your settings will be the following. I'm going to switch to my template, hit OK. That'll change it to looking like this. Now, for you to get that template, make sure you change your values. Our black, we have a black line for here with 30%. Placement is to the right. So the bars are now on the right hand side. That may be preferred for you. It may not. If you zoom in, you can see your volume bars while looking at current price action, but it can also cover current price action. That's why we have our opacity to 15% for the volume bars. You will also want to change your row size and value area volume. That way they match the same that I have, and have this extend right as well. That way these bars are in the same position as mine. We do not use the developing point control or value area. Our value area high is red, value area low is green. Red signaling we want to sell off, green signaling we would want to buy in, blue signaling a neutral area for that point of control. The point of control is where there's the most volume in your range. It can fluctuate, it can be right in the middle, it can be very close to the value area low, or it could be very close to the value area high. It doesn't have to be in one set spot. It does move where the value area high is your top and your value area low is your bottom. You do see we made this move above this point of control, our blue line. This move helped push us forward when we made all of these green candles. These green candles suggest if we keep making green candles, we can break the value area high. Once you do that with continued green candles, you can create a new fixed range volume profile. So I'm mentioning this because we may be able to do this if we come into this gapped area and we hold in this gapped area. On the other hand, if we push forward, jump to the gapped area, see a whole bunch of red take over, come back down toward our value area high, then we see a bunch of red candles, we're going to break that value area high, we're going to make a move back down toward our point of control, And if we see further red candles like we started to get here, we could make a slide down to our value area low like we did over here. Those gaps did end up helping save that bearish crash as they gave us bullish momentum. But remember, we do still have gaps down to fill. So our value area low, that is right here. You can see we have a lot of volume right here. Right up here, we do have some more volume. If we zoom in, you can see the volume bars a little better. Change the opacity so they're a little dark, easier to see for you. So now with the opacity around 30%, it's a little easier for you to see that volume bar. So we have a higher volume. We have some selling. This red bar shows more selling pressure than green. When you have more green, like right back here, that shows more buying pressure than selling pressure. You want to see that green taking over if you want to push above these ranges. If the red starts taking over, you are going to roll away and potentially break down toward your bottom range that is below you. So if you're pushing your value area high, you'll push to your point control. If you're pushing to break above the point control, you'll push to the value area low. If you're under that value area low and you get them red candles, that's where you can break down into a previous fixed range volume profile or down into a new one if you haven't seen previous price action down yet. So that's how you would trade these fixed range volume profiles. You want to watch these bounces. When you're near these lows, that's ideally where you're buying in. When you're near these highs, that's ideally where you want to eyeball selling. And when you're in the middle, that's where you want to be cautionary. Thank you for watching this video. We look forward to seeing you in tomorrow's Mastering the Trade video. Hit the like, hit the subscribe, and hit the notification bell. That way you don't miss it when it releases.